The economy is front and center in the federal election campaign. Joining us now to discuss the biggest economic challenges and opportunities facing our country is Andrew Kelvin, Managing Director, Head of Canadian and Global Rate Strategy with TD Securities. Andrew, always great to have you with us.
Thanks for having me.
All right, so we're on the campaign trail now. We're heading towards a vote in 5 weeks. Let's talk about some of those economic challenges facing this country. I think we're going to hear about them a lot over the next little while.
Yeah, I think you're right. The most obvious economic challenge facing Canada is the trade disruptions with the United States. That has really, I'd say, usurped a lot of people's attention heading into this election campaign, which, although it just started, feels like it's been going on for quite some time. And I think that's certainly going to be on the economic front, the main question sort of facing the leading candidates.
Of course, on a campaign, we look to the party platforms. We want to hear about policy before Election Day. What are we hearing so far on fiscal policy, and what are you watching for?
So it's been really interesting because it seems that the two leading candidates, at least, have really coalesced around a lot of the same issues. Competitiveness, cutting red tape, promoting housing supply, a little bit of tax relief. We've seen both the Liberal Party and the Conservative Party announce tax relief measures in the last day or two. So it's an interesting campaign insofar as, thus far, it seems like everyone agrees what the big issues are, and it will really just come down to a question, I suppose, of execution, which is a very hard thing to judge from a campaign document.
Let's talk about, this is something you and I talk about a lot. I think people in our circles and financial circles talk about productivity, the problems we've been having. Does that resonate with the average person? What would you expect to hear on that front? I think that's harder to talk to regular Canadians about productivity.
I think it's been starting to resonate a little bit more. It's been sort of filtering through the media in a lot of conversations over the last couple of years that GDP per capita in Canada has been quite poor. I think if you were to tell someone that GDP per capita was negative in Canada, it's a lot more likely now that they would be familiar with that statement, that you wouldn't be telling to them for the first time compared to, say, a year or two ago. So I think it is becoming more resonant, and I think it really goes back to the idea that with the Canada-US relationship at a bit of a crossroads, it's really focused, I think, a lot of Canadians' attentions on the economy. People are sort of rethinking how the economy is structured, and you mentioned earlier opportunities. I think if there's a potential silver lining in any of this, it would be if it could re-energize Canadian policymakers and Canadian voters. Because at the end of the day, policymakers are going to react to what voters care about to really refocus on some of the issues that have been holding back Canadian productivity. And I believe we've heard both of these sort of leading candidates talk about eliminating internal trade barriers. We've heard it from Prime Minister Carney. We've heard it from the Leader of the Opposition, Poilievre. It's something that is a much bigger part of a campaign than we've seen in the past. Because in the past, you'd hear people like, oh yeah, we should get rid of internal trade barriers. Those sound bad. But no one really was that concerned, like at the voter level. Like that was not a top issue for people to eliminate trade barriers and promote productivity. Now it's getting a lot more attention on the campaign trail, and if there's follow through from whoever happens to win this election, like that could only be a good thing.
Let's talk about, you briefly mentioned housing. Obviously, this would be the one issue, which I think is front and center for a lot of Canadians, that really isn't tied to the White House and economic policy and reports from day to day. On that front, what would you expect to start hearing, or what have you already heard? So
we've already heard several candidates talk about eliminating GST on new home purchases for first-time home buyers of $1 million and under. That's something that is out there and is now a policy of bipartisan support. Both of the leading candidates have really focused on the notion that supply issues are a problem here. They've focused on the notion that red tape and bureaucracy is one of the things that's holding back Canada's ability to produce a sufficient supply of housing, along with skill shortages. And everyone seems to sort of agree that these are the issues that need to be addressed. We need to make it easier to build homes. It can't just be measures that stoke demand. It has to be measures that stoke supply as well. They're great things to hear. At the end of the day, housing is a municipal and provincial issue at core. So it will come down to the ability of the next Prime Minister to work with municipalities and provinces to try and streamline approval processes, make sure that they're better able to get a sufficient number of homes built. And the fact that you're seeing an agreement between the Conservative Party and the Liberal Party that this is the way to approach the problem. Like, that in and of itself, I think, speaks to how important this has become to Canadians, that everyone sort of feels the need to get to the core of the issue. We've tried to do things on the margins in the past to boost affordability, and all it does is push house prices higher.
When we think about all the headlines lately, obviously, importantly, trade, policy out of the States, tariffs, certain deadlines, they dominate. Now we have a federal election campaign entering in there, taking up the headlines. The governor of the Bank of Canada gave a speech last week. I saw a little bit of coverage of it. You think it was actually a little more intriguing than perhaps the public and the press had given it in terms of time, of print space?
I think it was a super interesting speech. And this is one of those things that it's going to appeal more to people who are really in the weeds of the economy and central banking. But what made it such an interesting speech is that normally when you're a central banker, your tools work over 6 to 8 quarters. If your target's inflation, you're impacting inflation over 6 to 8 quarters. So you're not looking at where the puck is now, it's where the puck is going to be. The problem is there's a huge amount of uncertainty in the economy right now. And it's not the sort of uncertainty where you have gradients of it, where you think growth might be good or it might be good but not as good. These aren't things where your uncertainty can be bounded by a 0.5 percentage point in GDP growth. It's two just totally dichotomous paths here. It's things
like
that are mutually exclusive.
Right?
Yeah.
It's going to be a 1 or a 0.
If there are no tariffs, things are pretty good. If tariffs persist, things will be pretty bad. And if you can't analytically put a probability on the likelihood of tariffs persisting or the length for which tariffs will persist, because as far as I can tell, there's equally good arguments for the tariffs on Canada to last for 1 more week and forever. If you can't do that, it's very hard to have a central projection of the Bank of Canada. So what Governor Macklem was talking about doing is recognizing the extreme uncertainty and taking more of a risk management approach. So normally they'd have their central forecast and they'd set policy that'd be the best policy for that forecast. Now, if you're going to talk about setting policy that works okay in several different scenarios, you're moving to this risk management approach. You're not trying to optimize your policy, you're just trying to minimize your downside. And what that means, in essence, is you're going to be less forward-looking and more backward-looking. Now, that's interesting in Canada because the Canadian economy has been a lot stronger than we'd anticipated through the fourth quarter. We saw that CPI print for the month of February, which was sharply stronger than most people had expected. And I would just note that Governor Macklem presumably would have written that speech before the CPI numbers were in his hands. I don't think they hastily did it on the back of a napkin on the way to the speech. So if they were already thinking about putting more weight on realized data as opposed to future outcomes, it does raise the sort of potential of maybe they decide they need to take a little bit of a pause on the way to their terminal rate. And really, really interesting way that also implicitly means they're willing to fall a little bit behind the curve here to avoid over-easing. To put it a little bit glibly, they don't want to make the mistakes they made during the pandemic where monetary policy was too easy. They're content, it seems, to risk making a bunch of new mistakes by falling behind the curve to avoid repeating that mistake of over-easing.